Coinbase is one of the largest cryptocurrency trading platforms in the space. Since its creation in June of 2012, they have served as the most accessible crypto gateway for people interested in crypto. Coinbase's position is so powerful that for a short time, they created what the market called the Coinbase Effect, meaning that when coins get listed on Coinbase, there is so much excitement around the listing that it often causes the token to spike in price dramatically. This was seen very often during the last bull run, especially during the time frame between June 2021 and April of 2022, when such tokens as AMP, XYO, and LCX hit the platform. But surrounding the excitement of all these listings was a very big problem. In this video, we will look at the pending situation between Coinbase and the SEC to find out if the SEC has anything to stand on, and more importantly, what effect this will have on the crypto space going forward. As always, I'm Wade Teamer, and you're watching DHN. On June 21st of 2022, the Securities and Exchange Commission charged former Coinbase employee Ishan Wahi with insider trading, citing the fact that between June of 2021 and April of 2022, he tipped off his brother and friend to when Coinbase would be listing new assets. The person in question purchased 25 different assets, 9 of which the SEC has said were securities. Altogether, the alleged got away with over $1.1 million in profit. Now, answering whether or not those gentlemen committed insider trading is not our focus. Our focus is the 9 coins that the SEC has decided to name as securities. It is these 9 tokens that the SEC is using against Coinbase in an attempt to lay down enforcement. But can they do this? Well, to answer that question, we have to break down exactly what a security is. According to Investopedia, a security refers to a fungible, negotiable financial instrument that holds some type of monetary value. It represents an ownership position in a publicly traded corporation via stock, a creditor relationship with a governmental body or corporation represented by owning that entity's bond, or rights to ownership as represented by an option. Simply, securities represent physical assets or ownership in a particular enterprise or represent a debt payable to an institution or enterprise. Traditional securities come in the form of stocks and bonds usually, which is one of the reasons why the crypto space is so up in arms. In relation to crypto, however, the SEC is currently using 3 items to test if a crypto asset can be considered a security. The first is the Howie Test, which is based on a court case, W.J. Howie Company versus the SEC from 1946. This, alongside the Securities Act of 1933 and the Securities Exchange Act of 1934, gave a general definition of what the terms of an investment contract should be. The Howie Test states that a financial instrument will be considered an investment contract and therefore a security if there is 1. An investment of fiat, 2. in a common enterprise, which is a relationship with 2 or more companies, or 3, an expectation of profit derived from the managerial or entrepreneurial efforts of others. In my research, I stumbled upon a quote from a Winston & Strawn crypto law post that really sums up our problem perfectly. What matters is substance, not form. Many crypto assets do not appear on their face to be securities because often they do not take the form of stocks or bonds. But the definition of security contains a catch-all term, namely investment contract, that picks up exoteric instruments that, in substance, not form, have the same basic attributes of the types of financial instruments expressly named as securities in the definition. The problem we are facing right now in regards to crypto being named securities is that current securities laws were set in place 5 years after the invention of the television. The point is that regulators of the day could not have imagined a world where currency set on distributed ledger technologies like blockchain. This brings us back to Coinbase. How could they be listing securities? Well, according to Coinbase, they don't, period. And I'm inclined to agree with them, especially after I read through their token review process. The process includes an analysis of whether an asset would be considered a security based on the definitions and terms we established earlier. They also consider regulatory compliance of the assets. They run this process for every token they review, even if the token doesn't get listed. So if you've ever wondered why your favorite asset hasn't been listed yet, this could be why. Out of this came a petition In this petition, Coinbase proposed the idea of a crypto securities market, where these assets could be traded on a regulated platform. It was here when I discovered that the markets we invest in are not the primary markets where securities would be traded, which is why we never see them. What we all invest and trade on is the secondary market. This is where IPOs live. So, my question now is Coinbase looking to create a securities market for crypto? That is still to be determined, but the Department of Justice has reviewed the allegations of the SEC against Coinbase and could find no evidence of wrongdoing. 3 of the 9 assets named as securities we know all too well on this channel: AMP, LCX, and the XYO network. The XYO network is a crypto that focuses on Web3 applications and geospatial technology. The main entry point to the XYO network is through the Coin app, which is free to download and allows you to earn XYO for completing tasks or simply by a process called geomining, where you can extract GPS data using your mobile device. There's no investment contract, and you really don't have to buy anything to participate in the ecosystem. So if anything, the SEC just made XYO. Now, what about AMP, the Flexa network? Well, the AMP token is a collateral payment coin that facilitates transactions on the Flexa network. The only form of contract involved is that of a smart contract, which is used in order to gain access to the Flexa network. However, you're not necessarily using Flexa directly to gain a profit. Flexa is again used to process payments from fiat to crypto. And yes, you could say that the underlying real world asset would be fiat or even crypto, but again, we don't have a precedence for that. Now, for LCX, this is kind of hilarious. LCX is a regulated digital asset exchange. Notice the terminology there. They specialize in the issuance and trade of digital assets and tokenized securities. What gives LCX protection is the Liechtenstein Protocol, which is a standard for compliance of tokenized securities. This protocol was established outside of the US, so that would mean it would place them outside of the jurisdiction of the SEC. LCX was founded in 2018 and operates out of Switzerland. In 2020, LCX gained regulatory approval for 8 blockchain-related registrations by the Financial Market Authority. And here's how I know personally that LCX is legit. Last year, they conducted the token sale for Digibyte's metaverse token, DGMV. I was definitely heartbroken to discover that because I lived in the US, I could not participate. Talk about investor protection, right? The problem is that the SEC honestly has no idea how to deal with cryptocurrencies because they themselves were created for a different time in a different era. The other side of this coin is that other nations of the world have already figured this stuff out. They have either set up a new entity in which to regulate it or studied it long enough to figure it into their current monetary policy. Some, like Russia, have banned payments but still use blockchain and DLT for other areas of their economy. The point here is that other nations have figured it out and are moving forward because of it. Our members viewed a very special presentation this month on how blockchain technology is helping to usher in the greatest global infrastructure project of all time. In it, you'll find out just how late to the party the US is. With all that being said, if you want more dirt on the SEC when it pertains to Ripple, I would suggest watching this video. The SEC booked themselves into a corner a few years ago and now it's all falling back on them. While you watch, I want you to have a great day, have a prosperous day, and most importantly, if the money is digital, so is the hustle. I'll see you in the next video.